let me set the stage for today's episode. This isn't a surface level conversation. We're getting into real world insights, what works, what doesn't, and how to apply what you hear today in a practical way, whether you're building a business, a brand, or your next opportunity. I want you to stay with me until the very end because I'm offering a free bonus specifically for listeners who finish the episode. Something that can help you skip the line and move faster if being on this show is something you've been thinking about. All right, let's get into today's conversation. Hey guys, welcome to the Financial Freedom Podcast. I'm delighted to welcome back Rob, founder of North Square Capital. He helps medical professionals navigate real estate investing strategies. Rob, welcome.
My name is Rob Natali. I'm based in Boston, founded North Square Capital back in spring of 2022. What we do is work with medical professionals, map out the real estate investing landscape. So what does that mean? From being a landlord to being the bank, when everything in between, determine the best fit for your lifestyle, income needs to complement what you're doing in medicine, creating that second engine or stream of income through wealth creation.
Last time you came on the show was before Powell raised the interest rates. Back then, there was different strategies. How does the real estate landscape feel now with the Fed, the exit of Jerome Powell soon, a new Fed chair? How are you thinking about your portfolio?
I can talk about the broader landscape. The new Fed chair is projected to be coming in the spring, minus the pending litigation that's going on now with Powell. It's a whole other conversation. But there's the expectation that rates will continue to decrease once the new chair comes in. I know they just released the jobs market today. January had the highest layoffs since January 2009. It was very much a softening of the labor market where that could point to, hey, we need to reduce rates as one of the factors. But then you look at what's going on in the stock market, all-time highs, unemployment on 4.5%, historically at a pretty low level. You have two totally opposites that don't line up. From an investment standpoint, how do you go about navigating that? What I'm doing is focusing on strategies that are short-term liquidity and heavy cash flow. The reason being that if I want access to my capital in a shorter period of time to deploy, let's say, an investment opportunity that I see that I want to invest in, great. But I still want to get good yield on my money. That's one of the strategies, Chris, that we co-manage here at North Square Capital as a debt fund, is that type of structure. It's getting yield on your money somewhere between 8 to 10+% on your capital, but it comes with 90-day liquidity to where if you see something an opportune time in the marketplace, you have the ability to take some of that out and invest it into something else.
How do you see the real estate market changing in 2026 and beyond?
It depends. If we're going to talk about commercial real estate, multifamily or self-storage, if rates go down, valuations might increase. They talk about, you may have heard that expression of cap rate compression. How are you calculating a cap rate? You take the net operating value divided by what the price of the property, that's how you're getting your respective cap rate. That would be a big boon for the commercial real estate space if rates go down. I think that will make debt financing much easier to obtain, much easier for deals to what they call, quote unquote, pencil out. When you're underwriting an investment opportunity, does it make sense to invest? Is there a path to profitability? It's about who you're investing in, the people. It's that old expression, the horse or the jockey. At the end of the day, for those in medicine, or if you're a surgeon performing a procedure, you know what your outcome is. You know what you want it to be, but rarely does it go exactly the way you think it's going to from start to finish. There's some detour or pivot that you have to make in order to get to your end goal. That's where it's important to invest in teams that know how to execute the business plan. If you're investing in an opportunity, let's say it's in multifamily, the return profiles are going to be similar overall. who has the ability to bring that to execution? 80+% of due diligence should be on the team. The remainder on the investment opportunity. It's all about who can bring it to fruition.
We've gone through this period of rapid interest rate rise. The real estate market was in a slump. It'll be interesting to see moving forward. That being said, you talk about medical professionals helping them build wealth beyond the white coat, and you break down the ways to build wealth through real estate and the tax benefits. Talk about each strategy and how that will work moving forwards.
So I've put together a couple different things, an educational ebook I'm happy to share. Go to North Square Capital, and there's a contact page where you can request it. I host educational webinars. Build Wealth Beyond the White Coat is we're going over the 4 major paths of investing and building wealth in real estate. You have path 1, which is direct ownership, being the landlord. Maybe you own a number of single family homes that could be long-term rentals or Airbnbs. Path 2, think of a real estate syndication. For those that aren't familiar, a real estate syndication is when limited partners pooling together capital to invest in something that you wouldn't otherwise be able to invest on your own. You're relying on the general partner, also known as the sponsor, to execute that business plan. That's the group, just what we're talking about. Who's the team that's execution wise? That can be multifamily, self-storage, mobile home park, variety of asset classes with their own strengths. Path 3 is a debt fund. That's what I mean by being your own bank. It's a form of a syndication. What happens is the general partner or the sponsor, they're operating as the bank. They're lending money on specific real estate projects, usually first position liens. You as an investor get money or interest on your investment. Path 4 is a combination of where a lot of folks will fit it. They want to have a little mix. Some have higher tax benefits than others. Some have much higher liquidity than others. And some have a combination of both, all trade-offs. Direct ownership, you can have the highest tax benefit potential to offset active income, W-2 or 1099. Requires the most time, highest learning curve. If you get into a syndication, say a multifamily, you can experience equity, growth, income, and experience some tax benefits, while not as strong. The trade-offs, though, are they're relatively illiquid. Your investment capital is tied up on average at 3 to 5 years. Debt funds, very liquid. You get 9-day liquidity, risk conservative, steady type. Think of an everyday prescription that you take. You know exactly what you're going to get. Trade-off is no equity upside. There's no really benefit from a tax perspective unless you invest through a retirement account. And when I talk with folks, it's about learning what individuals' objectives are, long-term horizon, and how does it fit their lifestyle, their income needs, and reverse engineer it to come up with a plan. Think of it as seeing a primary care physician or specialist. What's the first thing that happens? Consultation, diagnose, prescribe, and implementation and follow-up. That's the method of how we like to go about having these conversations.
Quick pause here, because if this conversation is resonating with you, you'll want to stay until the very end. At the end of this episode, I'm giving listeners who finish priority access and the ability to skip the line if being a guest on this show is something you've been considering right now. No action needed. I'll share exactly how it works at the end of the episode. All right, let's get back to the conversation. What a great segue. We've worked together over a number of years. A lot of the strategies are not only to build wealth, but to help medical professionals reclaim control. Talk about the success philosophy and management to make sure it's a good fit.
The biggest benefits that our clients find, overarching one, is financial clarity and a path. To no fault of those in medicine, I had 3 family members who either are or were in medicine since they've retired. What I noticed is I came from a background in financial services. I worked with advisors for a number of years, and it was like the good old boys club. Top tier strategies were in isolation, not disseminated or educated to the general population. I didn't feel comfortable with that. It didn't resonate with me. I would look at my family who's in medicine, the long hours they're putting into work, 60+ hour weeks, always putting others before themselves. Unfortunately, all the years of going to school, no fault of their own, there was a lack of financial education put into place throughout that process. That's really what led me to start North Square Capital, seeing my background and what was going on with folks in medicine. The financial clarity aspect is what my clients experience. We're building that roadmap of retirement and potential work optionality. You highlighted burnout, a very real thing, not being able to practice medicine the way you want, with insurance companies being a big factor to that, unfortunately. Huge. That's a totally other separate conversation. But having you become work optional, where if you got into medicine to help people, you still want to do that. Maybe you want to work less. You still want to do it, but you want to have more time to do something else, a passion project or travel, or spend time with your family. When I work with clients and there is a roadmap of where they want to go, as a trusted guide, what I do is I guide folks. Real estate, a totally separate other piece to it, is I help clients build out their financial team. Real estate's the ancillary, the top piece. But let's say I'm talking to a client and they're looking for a CPA. Maybe they're looking for a financial advisor, or looking for someone in the insurance side, right? I can put them in contact with folks who I trust, who operate in the best interest of their clients, to help my clients form their overall financial team, just like they're part of an overall medical team, to use an analogy.
Do you anticipate the real estate market getting better, or is it going to be in stagnation? You mentioned commercial data centers. We recently had a guest talk about mobile home parks. Is it syndications, multifamily apartments? How do you see the playing out?
From an asset class perspective, there's so many out there. You can look at ones that have inherent tailwinds to them. If you look at mobile homes and RV parks as an example, with the cost of living in this country, mobile home and RV parks provide a more affordable way to live. That's an inherent tailwind for the overall space. Then it's doing the due diligence on the operator and the opportunity where it is. You could argue the same with multifamily, but then it's about where you buy. There's a lot of markets in multifamily. You Google, let's say, the Phoenix market, or you mentioned here in Austin, a huge supply glut of apartment buildings in Austin, Texas. There is a demand for multifamily from a renter standpoint, but where are you buying? What's the supply demand look like there? If you look at it, residential is a totally different ball of wax. Let's talk about short-term rentals. The days of just buying property and putting IKEA furniture are long gone. You really want to have your property stand out to drive revenue. At the end of the day, that's what it is, a business. In the short term, you can utilize AirDNA to look through data. There's so many different layers and factors that can go into it. I think some of the asset classes in this type of economy, tailwind wise, are multifamily, RV, mobile home parks, data centers. Yes, there is a lot of build out now for AI chips. So there's a lot of places you can go. That's for sure.
What do you think is going on in the stock market the past few days? Is it because of the Fed nominee? Is it because of Powell's comments? Is it earnings? What are your thoughts?
The market's been getting hit the past few days. One of the big pieces around that is the sell-off of tech and data names. One of the reasons around that is with AI and thinking Claude, Anthropic, if you utilize that for AI software, is coming out with something they fear is going to diminish the value of these companies in the tech and data space. From a stock buyer's perspective, That's a 60,000 foot overview. That overarching theme, though, is one of the biggest reasons why past 2 days the market has gone down. If you're referring to the new Fed chair, that sent gold and silver in a complete free for all because that was at all-time highs. That really took a nosedive. And one of the fears around that being thinking that the dollar is going to be strengthening because of that, going to lead to a lot of folks exiting. For those that invest in the stock market, which I am a proponent of, and you have benefits and trade-offs. One of the trade-offs in the stock market is you have no control over what's going to happen as far as your money. That's why diversification is very important. It could be up one day and down 20% the next day. Diversification is key, including real estate opportunities that you can get involved into to complement your stock portfolio.
How can people connect with you on LinkedIn and find out more?
Easiest way for folks to get in touch with me is if you go to northsquarecapital.com. As a place you can download an educational ebook, real estate strategies every medical professional should know. There, a contact page, submit your information and hear back from me within 24 hours. The easiest approach.
Thanks so much for coming on and providing your insights. It's going to be a really interesting time, and we look forward to seeing what happens.
Thanks, Chris.
If you stayed until the very end, congratulations. You've earned the freebie. As promised, here it is. Email chris@drchrislewmdphd.com. You'll find it in the show notes and simply put podcast freebie. A member of our team will reach out to you about being a guest on the show. If you found value in today's conversation, please take a moment to rate the show 5 stars and follow us on Apple Podcasts and Spotify. It helps more people discover the conversations we're having here. To be a premium guest on the show, book a spot or join our podcast community. You'll find the links in the show notes below. And if you're looking for more personal guidance, you can book one-on-one coaching call with me. Our books, products, and courses are linked in the show notes. Thanks again for listening, and I'll see you in the next episode.